to India Invest, where you learn about great companies to invest in the Indian stock market. Today, we're going to talk about a multi-bagger gem in the apparel industry, which means that there is a company out there that sells underwears and innerwears that can make you super rich in the coming decade. Now let us look at what that company is. So the company that I'm talking about is Lux. You may have heard of this company, you may have seen its ads, and you may have even used the products of this company. And the brand of this company is one of the major reasons why I think this company will grow at a very fast pace in the coming few years. So let us look at what the company does in detail. So Lux as a merged quantity is the number one in the Indian innerwear industry in terms of volume. It has a combined revenue of 417 crores. It has a 15% market share in the organized men's innerwear segment. So an important thing to note is that a very large chunk of the apparel industry, textile industry is in the unorganized sector. And this company has a fill rate of 95%, which means that of 100 orders that this company gets from customers, it is able to fill 95% of them without any back orders, without having to go back to the shop and make that product. So there's the prominence of all the products they have available readily, which is an important thing in a company like Lux, which has 5,000 SKUs, which means that it has around 5,000 different kinds of products inside of it. It will be 13K plus if counted the colors and size are separate. So there are 13,000 different products or different colors and sizes, different types of products that the company makes. And to achieve that 95% fill rate in such a large number of products is amazing. It is has a manufacturing capacity of 30 crore pieces per year. It has 7 state-of-the-art plants. It has a very large retailer network of 2 lakh retailers across India, and it is the largest exporter of innerwear from India, and it exports to 46 countries. It has 2,400 employees and 100 plus products. So it started in 1957 as Biswanath Hosiery Mills. It started exporting in 1993. It was a public limited company in 1995, and ever since then it has been on a magnificent growth journey. You can see that it has invested heavily in branding, in marketing. It has partnered with a lot of different actors and cricketers, as well as IPL teams, and it has launched more and more products like Lux Cozy Her innerwear range for women. It has started premiumizing its brands. It has launched a new brand called 18, which is the premium brand. And in 2021, the latest development is that it has merged 2 of its subsidiaries, JM Hosiery and Ebel Fashions, with itself. So now it's a single entity instead of 3 different subsidiaries, which were before. So now Lux, as I said, is present across diverse price points. So every apparel industry has 3 different segments. One is economy, which is like the cheapest segment, where people only buy clothes for its utility and don't care about the brand or anything. So it has a major share in the economy segment. So it has these prominent brands, Lux, Karishma, Venus, etc. And total revenue is 165 crores. And this is for the first quarter of 21-22. It is also present in the semi-premium category, which is majorly used by urbans. So it's not exactly very cheap, but it isn't very premium either. So it's the semi-premium. So the brand is an important part of semi-premium category, but no one is going to pay you too much for the brand. So Gen X, Lyra, Lux Cozy, and Lux Inferno. So these are probably the names that you may have heard. Lyra is a brand for women leggings. It's a very successful venture of Lux. Lux Cozy, and Lux Inferno. So 195, the major segment of Lux revenue comes from the semi-premium category, and now it has started venturing into the premium category with new brand 18 on and Lux Premiums, which is the export material for Lux that it exports to other countries under this brand name, and it has a revenue of 57 crores. So the premium category is small now because it has just started of 1-2 years ago, but they are trying to premiumize more. So yes, so as we talked before, it has 7 manufacturing facilities in India, 2 lakh plus retailers, 11 power brands, 5,000 plus SKUs, 46 countries of export, and 15% market share in men's innerwear segment, 30 crore pieces manufacturing capacity, 95% fill rate, and 1,150 plus dealers. So Lux exports to 46 countries. It has planned to target 60 countries by 2025. So it wants to be in 60 countries in the next 3 years. Geography-wise sales, most of the sales, 91% are domestic, but 9% of the sales are export. You can see the major part of their export is either in Africa, the Middle East, or the Southeast Asia, plus Australia and Germany as well. So let us look at the profit margins. So as is understandable, the economy class, which isn't about branding and all, so the margins of profit before tax are up to 15%. For semi-premium, it goes to 15 to 21%, and for premium segment, it's around 22 to 26%. So you can easily see why companies would target the premium segment, but you also have to understand that each segment has its own market. So the economy market is the largest, at least in India, which targets around 1 billion people. And as you move up this value chain, the market for you reduces, but then you can sell your products at a better margin. So they have tried to widen their reach. So they have a dealer network of 1170, and they are available in 2 lakh brand stores and 16 EBOs. EBOs are their self units. I mean, the Lux has started its own shops, retail shops around the country. They are targeting this EBOs even more now. They have a strong e-retail platform now and 12 depot drive faster distribution in India. They have their manufacturing facilities in West Bengal, Punjab, Tamil Nadu, and Uttar Pradesh. And they have 150 exclusive brand outlets targeted by FY23. So it's 16 right now, exclusive brand outlets, and they are targeting 150. So they want 10 times more brand outlets in the next 1 year. So they have an experienced board. The promoter directors have 24 years of average industry experience in the textile business, in expertise in sales and marketing, brand promotion, product development, etc. They have a very strong management team. They have inducted new members in the past 2 years. They have a growing trust. More and more FIs and DIs have attracted towards this company. The shareholding pattern you can see here, 74.4% is with promoters. This has actually increased. It was 69% a quarter ago, and this quarter the promoter holding has increased, which means that the promoters have very strong trust in the company. 14% of them is non-institutional, and there's around a 5% and 6% share of mutual funds and FIIs. So a very large promoter holding is always good for companies, because the people who are involved in running the company have a skin in the game and they're very sure of the progress of the company. So they're responding to market opportunities. The price range, as we talked before, is the lowest is 24 rupees. A vest, the economy vest would come in 24 rupees to 1790. This is the most premium product that they have. They have a cash balance of 208 crores. Whenever you uh, talk about a company or whenever you research a company, always look at the cash flows, because cash flows is what sustains a company. They have a very good cash flow. They have a 400 crore additional revenue generation potential that they have identified through an expansion. They are planning 110 crore near-term investment, uh, which is going from internal accrual, which means that the money that they have generated from the profits that will go into this investment. And they have a 20-year long-standing dealer relationship. So all of these factors are helping them to get into the market faster with more products, with more premium products, and they're going to respond to market opportunities better. So if you look at the profit and loss statement, so this is a 10-year profit and loss. So you can see in 2010 they had a net profit of 4 crores, which has now gone up to 273 crores last year. So last year during the lockdown, actually when most of the country was down, this company had a very large jump in its profits, in its revenue as well as profits. They're like a 25% increase in the revenues and a very large jump in their profits. So let us look at its fundamentals. The ROCE of the company is 36.4, which is amazing for any company. The ROE is again 31%, which is also exceptional. The P ratio right now is 42. If you had bought into this company just 1.5 months ago, this was around 20. The stock was trading at around 1700. Now it's at around 4200. So I mean, whenever people spot a good company, the ratios sort of jump, but that is the whole point of investing in good companies. The 5-year profit growth is 40% CAGR. So every year in the past 5 years, the company has grown with a profit of 40%. 40% CAGR is their 5-year profit growth. So if you look at the quarter segment analysis, this is this quarter, the first quarter of FY22. The premium segment has jumped 136%. And why has that happened? The volume growth is 111%, and ASP is the average selling price. So this is the volume growth, the number of pieces sold, and ASP is the price of the product. So if you increase the price of the product, your revenue increases, or you can sell more product and your revenue increases. So in the premium segment, since it's recently launched, you can see that the growth has been phenomenal. 111% volume growth. For mid-premium segment, it's 12%. For economy segment, it's minus 2%, but the average selling price has increased by 20%. So we're still growing in the revenue. And so a total of 33% sales growth and 9% volume growth has led the company from 313 crores to 417 crores. Now let us look at why the company will grow in the coming few years, because this was the past performance, but we have to look at why companies will do better in the coming times. So it is expanding, it is foraying into new segments and geographies and expanding multi-channel footprint. It is integrating, it is capitalizing on synergies through its merger, as I said, with its subsidiaries. It has creating new benchmarks for quality and comfort. It is adopting new technologies. They are augmenting their digital capabilities with investment in automation. They have adopted SAP HANA recently for enhanced operational control. Their efficiency has been driven by presence across value chain and scale. They've also invested heavily in enhancing their manufacturing capabilities. So they have presence across the value chain from the yarn to the final packaging. They have a flexible core manufacturing process, and they have recently done the complete upgradation and replacement of old equipment. So this is the 25 crore investment on cutting machines that they have imported from Italy, Germany, and Singapore. And since they have a very extensive presence in the manufacturing process, they have economies of scale in their favor, so they can produce 30 crore garment pieces every year. Now they're venturing into newer segments and regions. So if you look at this, as we talked before, they were initially only in a way pure play. Now they have gone into athleisure and outwear play. So athleisure and outwear are segments which have better margins, so it's good for the company to invest into that. It also diversifies their operations. Unique socks, innerwear, and sleepover connections for 1/8 globally. So if you look at this, you can see that most of their sales are in the north, central, west, and east region. They had a very small presence in the south segment, only 2%. So they're foraying into the southern segment of India. They've also entered into the female segment and kids segments. Initially, they were only into the men's segment. Now they're foraying into that as well. Their focus is on premium innerwear range. The current market share is 57 crores, but this is expected to grow to 500 crores in FY25. So in only 3 years, they plan to increase their premium segment by 10 times. They have forayed into 46 countries already. They're planning to go into 14 more countries, and their export revenue has planned to be increased by 60% in the next 5 years. They have increased their EBITDA margins. So you can see in FY21 their EBITDA margin was 18%. Now it's 22%. So that is essentially because of better operations, operational efficiency, as well as foraying into premium segments and other segments like athleisure. They've expanded through multi-channel footprint. So initially they were focused only on wholesales, so they have increased their wholesale presence as well. They have association of 1170 dealers. They have a strong presence in multi-brand outlets and large format stores, but now they have started investing in their e-commerce footprint, trying to make their online presence. So now they're available in Amazon, Flipkart, Myntra, Ajio, etc. And they have a very good dealer relation, which can be seen by its attrition rate, which means dealers who have left association with them. So they have less than 1% dealer attrition rate. So most of the dealers are loyal to the company, and they have very good relations. They have, as I said, 16 exclusive brand outlets. So initially they were focusing only into wholesale. Now they are going straight into retail. They want to increase this 160 plus large store formats to showcase the entire product range for premium offerings. So now they're focusing more into online as well as direct retail. So they have a very large share going into branding initiatives. 8% of their average revenue is spent on branding. So from FY17 to 22, in the last 5 years, they have spent around 8% of their sales revenue on branding. And you can see that because most of these ads featuring Varun Dhawan or Amitabh Bachchan, Kartik Aaryan, Taapsee Pannu, these have been very successful marketing campaigns, and they have built their brands judiciously around them. They've roped in very large and popular actors and cricketers for their branding initiative. They've invested 667 crores in branding investment, and the return on every rupee spent is 16.47. For every 1 rupee that they spend on branding and marketing, their revenue is 16 rupees. So they have concentrated on branding, and once you have established your brand, I mean, the returns are exponential in the coming times. So you can see that with companies like Coca-Cola and Colgate. So because they brand themselves so much, they stay in public memory, and then their sales are always consistently high. So they have strengthened their financials as well. So you can see that they have overhauled their credit policy to strengthen working capital. The debtor days have reduced from 107 to 95, and their inventory cycle days have increased from 126 to 131. The creditor days have increased from 55 to 61 days. Their debt to equity ratio has reduced. So they have considerably reduced their debt, and their interest cover has increased by around 3 times in 1 year. Their profit growth has been exceptional. They are focusing on aggressive reinvestment in the business with focus on premiumization. So most of the money that they get, they are investing back into the business to grow the business, and they're focusing on premium segment, which is very good because, as we saw, it has a better market operating margins. So if you look at the chart, the last 1 year's performance has been this. So as I said, if you'd invested like 2-3 months before, it was around here, 1700, and now it has jumped to around 4000. The returns of 1 year has been 189%. So it has worked phenomenally well. This is of course after the results and the buyback. So yes, the company is at a very good juncture to buy. It is poised for a very large growth phase in the coming 5 to 10 years. So do your research in the company, and definitely tell me if you have invested in the company or plan to invest it. Also tell me in the comments if there are some other companies that you'd like to see a deep dive analysis into. So that's it from me today. So please subscribe and share it with people who you think will benefit from this analysis. Let me know in the comments if you want some other companies that you'd like to see. Thank you.